I often see where, I don't want to make more profit because then I'll have to pay more tax. But what I would challenge you to shift your perspective is, there's things that you can put in place to help make sure that as you grow your business, that you can cap your tax. Making money is necessary in business, but it's not the end all be all. And I think that those are the businesses that often last, are the ones that you really understand why you started and what change and impact you want to make in your customers' lives and worlds.
Hi, I'm Charlene Oy, dietitian turned business and marketing coach, and you're listening to the Nutrition Business Show. Hello, welcome back to episode 50 of the Nutrition Business Show. Now, if the topics of business tax and money management seem really overwhelming to you, then know that you're not alone. I get you, and I know what it's like because I've been in your exact shoes as a dietitian trying to start and grow my business without any knowledge of what tax laws are like and knowing how to structure things. So I'm compliant and I'm still profitable growing a business. Now, as a business coach and marketing strategist now, I often get questions from clients.
I have several questions
around topics like how to structure their business. Do they do it as a sole trader? And if so, when do they actually transition to a company structure? When do you register for GST and submit their statements? When do you start to set aside money and pay yourself a salary from your business? Do you set aside money for tax and superannuations? Now, these questions are all super relevant. I'm sure you would be keen to find out as well. And so I thought, who best to invite onto the podcast today? None other than Diana Todd, an Australian registered tax accountant. Now, Diana is the owner of Balance Tax Accountants, an online Australian registered tax accounting firm for business owners, serving them all around Australia. And she's on a mission to make tax less overwhelming and scary for business owners and helping them to feel more in control of their money and be able to grow and scale their business confidently. Now, whilst our conversation today is centered around Australian tax laws, no matter where you're based, you're going to find our conversation around growing and scaling a business, the mindset that you need to adopt as you grow your business, and learning to invest and spend your money wisely. It's going to be relevant. So I'm really excited for you to tune into the episode. So thanks for being here. Without further ado, let's dive into my conversation with Diana Todd. Hello, Diana. Thank you so much for coming on to the Nutrition Business Show.
Thank you for having me. I'm really excited to talk all things money and tax.
Yeah, absolutely. Look, as health professionals, these kind of tax stuff, when it comes to money management, finance, accounts, it kind of goes over our heads. So I'm really excited to dig into some really key questions that often get asked by our clients that we work with. They're mainly dietitians, nutritionists, health and wellness coaches. So let's dig in, shall we?
Let's do it.
Awesome. Now, Diana, the first question I want to ask you is, oftentimes when health professionals start their practice, they start as sole traders. So love for you to explain to us, what is the difference between sole trading and as a company unit?
Sure. So if you have started your sole trader business, I would say you're in the bucket with 80% of businesses in Australia have started as a sole trader business. And so you're not alone. And what a lot of times happens is a sole trader will start trading, get clients, repeat customers, grow the business, and then will come to a point where it's time for them to become a company. And the difference is, a sole trader, the ABN is registered in your own personal name. So if you're to look up in the ABN lookup, the ABN register, you will find your ABN linked to your personal name there. A company structure, or a business run under a company, the company is its own separate legal entity, and it has its own ABN, its own TFN, should have its own bank accounts. And so there is a legal separation between a sole trader and a company, and that's the main difference. Now, companies can enter into contracts, run businesses, lodge taxes, open bank accounts, all the things, just like a sole trader can. It's just that it's done under the company ABN structure. So there are some different rules that apply for money and tax.
Yeah. So for someone who's at the start, they're more than likely a sole trader. So what are some of the things that they need to register for? So you talked about ABN, TFN. Is there anything else?
So as a sole trader, first is get your ABN, then be mindful of the GST registration threshold. So when you're reaching sales of 75,000 Australian dollars across 12 months of business in a row, that's when you're required to register for GST. Now, at that point, that is when you would do a quarterly BAS return with the ATO. So if you are a sole trader who's not registered for GST, then there's no need to do a BAS. You just have your annual tax return. But if you are registered for GST, you'll have to lodge and pay your quarterly BAS with the ATO. So those are the registrations to be mindful of. And then a lot of people ask me as an accountant, Diana, when is the time for me to switch to a company? And at that point, that's when you are making $130,000 net profit as a sole trader. The reason why you would switch to a company at that point is because a sole trader's income tax, the way the tax percentages work in Australia, they start off at 0 and they go all the way up to 45%, depending on your level of income. Now, a sole trader business that's making $130,000 in profit is paying 25% tax. But beyond that, the tax starts to go up 30%, 40%, all the way up to 45%, the max at the moment. A company can make millions and millions of dollars and will only pay 25% flat tax rate. So that is when you get to the point where for tax savings, it makes sense to switch to a company. The other reason that you would want to switch to a company is the business risk is something that you don't want to be exposed to your personal assets. So a sole trader business structure, because the ABN's in your own personal name, all of your personal assets are at risk to the business, exposed to the business risk. So when a business gets to the point that it's hiring employees, leasing commercial space, opening a warehouse, there's just another level of risk that's introduced to the business. A lot of people want to have that legal separation between themselves and their business to protect them.
Wow, so many things to think about there, isn't it? And I can get that it's a big conversation that you need to have someone who's starting their business to check in with an accountant and find out what are some of the key things to do. And that as you grow your business, again, keeping in close contact with your accountant to make sure that you're also thinking about ways to be smart about your tax savings as well. Because you mentioned the kind of cut-off point is around $130,000 in profit. So that's not income, it's net profit. So something to consider there. Yeah.
That's right. And, a lot of people who run businesses are confused about what's the difference between net profit and sales or revenue. So to break it down, sales, revenue is the same, two different words for the same thing. That's the money that is received from your customers. Then you've got your business expenses, which are your tax deductions, and those are deducted from your sales. And what you are left with at the end of the day, after all the business expenses are paid, is called net profit. And net profit is what a business pays tax on. It would be so unfair if the ATO taxed us on our sales because it wouldn't be giving us credit for all of the money that it takes to actually open the doors and run the business and grow the business. That's why we're taxed on net profit.
Yeah, absolutely. Because I'm thinking back to the time when I was running an in-person practice, I had the rent to pay, electricity bills, insurance for the building or the office unit that I was in, and all these other associated costs like admin and all of that. So that all gets counted as the expenses, and you could be making, say, $200K a year in sales. But if your expense is taking up, let's say, $100,000 of your business, shouldn't get to that point. But if it's that, then you're left with $100K in profit. So that's what the ATO looks like for in terms of tax, isn't it?
Yeah, and there's this limiting belief in business ownership I often see where, I don't want to make more profit because then I'll have to pay more tax. But what I would challenge you to shift your perspective is, there's things that you can put in place to help make sure that as you grow your business, that you can cap your tax, like setting up a company and having it being the flat 25% tax rate. So then at the end of the day, I'm going to keep 75% of the profit and the ATO gets the 25%, right? So I would never say that it's a good idea to cap yourself or limit yourself just because you don't want to overpay tax. Instead, make sure that your business structure is set up in a way that helps you save money on tax.
Love that. Very clever. Yeah. And Diana, if you could also, I wanted to use this opportunity for you to introduce yourself to our audience. So share with them what you do, why you decided to go into this area, because taxation and accounting can be I'll use the word boring because that's what some people have said to me. It can be quite a boring area. What got you into this area?
So I have been an accountant ever since I started working in my 20s. And I was working in the corporate world, and I had a life experience when I was 29. My partner passed away from leukemia, which is blood cancer. And he was only 27 years old at the time. And so I had this most tragic, difficult thing happen to me. But it was actually the biggest gift because it gave me what I would call a bit of a midlife crisis a little bit earlier than most people get it. And I was sitting there in my corporate job thinking about, I'm spending my time and my energy saving this money that already has millions of dollars money on their tax, but I'm not seeing any real impact where I'm making a difference in the world or in people's lives. And so I thought to myself, how can I do that without completely starting over careers? And that's when I decided to go and get a degree in tax law and become a registered tax agent and open a small business-centered accounting practice, which is Balanced Tax Accountants. And that way I can show up every day, help small business owners understand these really complex things about registration and business and how to save money on tax and how to manage your business money, build a profitable business. And I have, for the last 10 years, been able to see the real impact that my work does. So that's a little bit about how I got started. I also feel like I was one of the first accountants in Australia that was on Instagram because businesses weren't really on Instagram back in 2015 when I started. And that was something that I just wanted to show up differently than the industry. The accounting industry has this stereotype. It's very old school. It's very out of touch. And really, there's this limiting belief in the industry saying that online businesses are they real? Can you actually make money online? And as a tax accountant, I want to tell you, yes, you 100% can because I've seen it. And they're real businesses you can grow, build profit, feed your family, have income from. So that's how I got started and how I loved showing up in clients' lives and businesses.
Yeah. And can I just say that I love seeing someone like yourself on Instagram just sharing your knowledge on an area that can be quite boring or just over the heads of a lot of people, and just the fact that you talk about it, you have those money conversations. I love it. And that's essentially how we connected, isn't it? We follow each other online and I learn from you. And I just think it's so helpful to have that presence on Instagram.
Thank you. Thank you. It's really just an honor when a business owner chooses us to be their accountant because it's a certain level of trust. We've got to create a safe space for people to really open up and be frank about, I really don't know how to manage my money. But what I would say is nobody is born knowing this stuff. And the education system doesn't teach you how to run a business, doesn't teach you how to build profit, doesn't teach you anything about taxes. And so don't judge yourself harshly for that. I would reach out to a professional, get help, ask them your questions, and make sure you've got the confidence you're not missing anything. Because no one wants an ATO surprise.
No, the worst thing will be getting a big tax bill at the end of the year, which is not pleasant. And I shared with you earlier, Diana, that I hired an accountant very early on in my business because I just didn't really know a lot about this area. I wanted to make sure I was compliant with my taxes and have all the registrations in place. So I always say to my clients, you want to think about having an accountant or even a bookkeeper to start with in your corner early on to keep your books clean.
100%.
So talking about this topic, can you share with us what is the difference between what a bookkeeper does versus an accountant and a tax agent?
Basically, they're all accountants of different kinds, okay? So everyone would fall under that general category, but a bookkeeper is someone who focuses on making sure that your Xero, your MyOp, your QuickBooks, your Rounded, whatever bookkeeping app you're using is set up correctly and all the accounting transactions are recorded properly. And a accountant is someone who might be a bookkeeper, but they also might be a tax accountant. It could go either way, depending on what they're registered for. In order for an accountant or a bookkeeper to provide BAS services, like where they help you do BAS returns, they have to have a BAS agent license. And that authorizes them to do BAS returns and also help with payroll and super guarantee transactions. The next level above that is tax agent, which is a tax accountant who can do annual tax returns and business structure setups, along with all of the BAS agent services like bookkeeping, quarterly lodgements, things like that. So that's a little bit of the difference. Some tax accountants offer bookkeeping services, some don't. It just depends on what they specialize in. And I think that's why it's really important to find an accountant and a bookkeeper who has experience in your industry and really understands your business, because there's a lot of different businesses out there. And so there's lots of different types of accountants that know and specialize in different things. And if you work with one that has experience in your industry, then they're going to make sure that you don't overpay tax and that you're set up and you don't miss anything that might come up. Because tax law changes every year.
It does. Oh my God. Every time there is a new federal budget announcement and stuff, it just does my head.
Yes.
Oh my gosh. Yeah. And I love what you talked about, Diana, about finding someone who understands your industry. I've never shared this, but this is something that happened to us, I think, in our first or second year of business. We had a family accountant who did my mother-in-law's taxes and stuff. So I thought, okay, I'll go to him to help us with my dietitian practice, to do my taxes and stuff. And I started asking questions about GST and stuff like that on my consultations and services in the health industry. And I was given the wrong advice about needing to charge GST for health consultations. And so I had to backtrack at the end of the year to try and fix that. And that's obviously down to that person not understanding the health industry. But I wanted to use this opportunity as well for you to clarify for our audience, when does a health professional charge GST? And what sort of services, like consulting, for example, would they charge GST versus online courses or memberships?
Okay, so when it comes down to GST, by the way, for anyone who doesn't know, is short for Goods and Services Tax, which is a tax in Australia on goods and services consumed in Australia. So if you're registered for GST, then your business needs to charge GST on certain items to your Australian customers. So if you have customers that are located overseas or internationally outside of Australia, you would not charge them GST on any of your services, okay, or your products. But for someone who's registered for GST, the different services and how you would know whether to charge or not kind of falls under, is it considered medicinal or part of like medicine? Is this a medical thing or is this a food item, okay? And for example, supplements, they have GST on them when you sell them because they are not considered food. They're outside of that. So this is where, for specific things, I would look up on the ATO's website because they actually have a webpage dedicated to this and says what is a taxable supply and what's not. But if you're someone who does consulting sessions, it depends on if it's under like your medical license, where like a psychology session would not have GST, but a business coaching session or a nutritional coaching session might have GST. It just depends on the licensing and also how it's classified, whether it's medicinal or not. Yeah.
So if we're looking at someone who's a dietitian where we provide medical nutrition therapy, then there is no GST applied to it versus, let's say, a health coach, for example. Yeah, and that can vary between whether or not it's a business to business model or business to consumer as well, isn't it?
True. Yeah. And so this is why it's really important for your business and the products and the services that you're selling, whether they're physical, digital, or if they're like you're trading time for money sessions, then it's really important for you to know and understand how the GST applies to your business and what you sell. Now, with online, because we're going into the mastermind and digital product era, it depends on where your customer is located, but there's generally always GST on those types of sales if the consumer is located within Australia.
Okay, so if you've got someone who's located, so you're a business in Australia providing an external service to a client in the States for a health consulting service, then there is no GST because they are outside of Australia.
That's right. Yep.
Yeah.
Because GST is an Australian tax on goods and services consumed in Australia. Yep.
Okay.
And this is where having an accountant can really help, because this stuff is very complex and changes sometimes. So you got to make sure that you're keeping up with it and you know what the right thing is. So that way you're not charging your customers incorrectly.
Yeah, absolutely. Thank you for breaking that down for us and explaining it. It is, a very confusing area. Diana, another question I get asked from my clients is, how much do I need to set aside for my tax at the end of the year? So we're looking at someone who's perhaps a sole trader who's just started their business, maybe in their first or second year, making under 100K. So how much would you recommend they set aside?
To be safe, I would say 30%. And the way I would structure it is, if you've just started your business, I would have a couple of different business bank accounts and have intentions behind each of them. So you can have your main operating account and a separate tax savings account if you would. And then once a month, run your profit and loss in your bookkeeping software, see what your net profit is, and whatever 30% is of that, transfer that money from your operating account to your tax savings account and do not touch it. I find that the business owners that consistently do this are the ones that, when it's time to do their tax and they get the tax bill, they are like, you know what? I've got this already saved. So well done, past me. And the money is there. And the people who do not consistently put aside money for tax are the ones that are often caught out. And then there's no worse feeling than getting a tax bill and working the next year in business to pay off last year's tax debt, in addition to saving this current year's tax debt. And I find a lot of people find themselves in this situation, but if it happens to you, you learn from it, because you're like, I'm never going to allow myself to be in this situation again. But I would say, to be safe, 30%. And then at the end of the day, if your income tax return comes to be less than what you've saved, then you can treat yourself to reward yourself for being such a good saver when it comes to tax. Now, the ATO is enrolling lots of business owners into what's called the pay-as-you-go installment scheme, where they are asking business owners to prepay income tax every quarter to the ATO. If you are enrolled in this, it's mandatory. So once the ATO chooses that you're in, there's no way to opt out of it. But that's when they're going to ask you to prepay tax every quarter. And at the end of the year, in your tax return, if you've prepaid a certain amount, then you're going to get a credit for that in your tax return. So it's more about the timing of the payments rather than, you're not overpaying tax if you are in the pay-as-you-go installment scheme. You're just paying it up front.
Yeah, I've got a love-hate relationship with that in a sense, because every quarter you got to fork out something. But it trains you to put it aside for your tax. And I think a lot of people spend money pretty quickly the minute it comes in. So it does help them to be disciplined, and all of us to be disciplined with saving up for it. And with that said, I also want to chat about, how much money do we set aside for ourselves as business owners? Obviously, we've talked about the 30% for taxes, and how much do we pay ourselves? Do we even pay ourselves?
I think that when you first start out, we've got to prioritize where you're spending your money, okay? And so in the very beginning of business, the goal is to grow your business. You need to get consistent customers, get consistent sales. And I think that's the first real money goal with cash flow. Then the second money goal after that should be to start paying yourself. Because we've got to be real here. If you are not building a sustainable business that is able to pay you on the regular and consistently, then it means that the business is not going to be lasting very long. Because at the end of the day, you're a human and your family has needs and they cost money. And so we've got to be real here that businesses need to make money in order to survive and to grow. And how I would structure it for a sole trader, there isn't really any rule as to how and when and how much you pay yourself. But what I would suggest is that you work out how much money you need and then some to live, whether it's every week or every fortnight, and set up a recurring bank transfer that goes from your operating account to your personal bank account, okay? So this is going to take a little bit of setting up, because as a sole trader, when you go to the bank and say, can I have a business bank account? They're just going to give you a bank account with your name on it, because the ABN is a sole trader ABN in your own name, right? So it's you who has to designate that account in the way that you use it. as your operating account, as your tax savings account, as your personal account. And what I would do is set up a recurring bank transfer. So let's just say, for example, it's $500 a week. Have that set up so that way your business is constantly topping up your personal account. What this is going to do is it's going to make you feel really safe, like my business pays me consistently. And just knowing that is going to help you make decisions in your business that are not from desperate energy. Because when we go to grow our businesses, we want to be really intentional and mindful about where we're spending money. Not, oh, I need to make this sale because I've got to pay a bill that's coming up. So we want to build financial habits that show us that our businesses consistently pay us and increase it as time goes along. Now, if you're a company structure, then the correct way to pay yourself is to put yourself on payroll and to pay yourself through wages, and then you'll have to pay super guarantee and all the things. It's a whole nother thing. But as a sole trader, that is how I would get started and how I would set things up and then slowly increase it over time.
I love the advice there around just being disciplined and also wise around paying yourself as well, because we don't want to draw all the profit and put that into our bank account, because we also need to have some money in the kitty for the business itself and be able to reinvest that profit back into other things like business coaching, paying for softwares, hiring team, and all of those kind of stuff. So yeah, I love your advice about, just transferring the same amount, and that's your salary in a sense. I did that very early on, and it gave me less anxiety about, oh my gosh, my business is going to crumble overnight because we're not making enough. And there's always ups and downs in business as well. Yeah, True. It's awesome with that. So having that discipline is great, and it's a good habit to start from the beginning. Diana, I want to ask you about tax deductible stuff, because these are some things that can help reduce your tax, but obviously we want to do it properly and legally. So talk us through some of the things. If we have two different type of practitioners, so someone who sees clients in clinic, so they have an office, versus someone who works online, what sort of expenses can they think about submitting?
So if you find yourself wondering, can I claim this off my tax return as a business expense? I want you to ask yourself the question, if I wasn't running my business, would I be spending this money? And what that does is it makes it pretty clear whether this is a business purchase or a personal purchase. So if you're basically, what you do is with all your business purchases is you make sure that you keep records. So you've got to make sure you have receipts, tax invoices of all of your deductions. You have to keep them for up to 5 years because the ATO can come back and ask you for proof of what you claimed, what you purchased. So that's really important. And that's where a bookkeeping software like Xero could really help you make that easier. But basically, any business expenses that are connected to you operating your business. So it is serving your customers, it is paying the business expenses, but it's also growing your business. So any business coaching, any networking, any events that you go to, any seminars, any training, there's lots of different things that people forget that aren't just actually running the business, like rent for your commercial premises or wages for your staff or contractor payments or actual supplies, product that you sell in clinic if you have an in-person clinic. Basically, the general rule is anything that is connected to you running your business, you can claim off your tax as a business deduction.
Okay, cool. That's really insightful. If we were looking at someone who works from home in their online business, so what about things like electricity and water bills or cleaning?
Yeah. If you work from home, then you are entitled to claim the business percentage of your utilities. So with that, what you would do is work out the square meterage of your office space. And let's just say that is 10% of your house. It's going to be a little bit different for everyone, but let's just say it's 10%. Then that means you can claim 10% of your electricity and all of your utilities off your tax as a business expense. If you're renting, it means you can claim 10% of your rent as well. If you have a mortgage on your house, you own your house or you have a mortgage, then you're entitled to claim 10% of the mortgage interest. But if you claim, you might have to pay capital gains tax when you sell. So this is a decision that you've got to make for yourself. But that's how those things work. But in terms of home office, you can claim anything that you use to decorate your office, any plants, artwork, furniture, tech equipment, computer equipment, things like that, all tax deductions, because if you weren't running your business, would you have fitted out your office space? Nope. See? Yeah.
The extra accessory here and there to make it pretty. Well, I think it's important, isn't it? It makes your background look professional.
Oh, branding has got to be on point these days.
Yeah, definitely. You've got to set yourself apart from the rest. Yeah, I love that. Thank you. And I think, again, if you're not sure, just check on the ATO website or check with your accountant. They'll be able to give you advice on that. I certainly had people ask me, oh, what about my work handbag? Does that count? Or my uniform, if they have a uniform that they wear for their business, would that be counted as well?
So uniforms, yes. Actually, any clothing that is branded, yes. And in terms of handbags, as long as you can prove that you used it to carry your work laptop or work materials or supplies, then yes, as well. Now, if you have any expense that is a mixture of business and personal, then you would apportion it and only claim the business percentage of that item. So, like, for example, that would be applicable for your mobile phone bill. Unless you have 2 mobile phones, then the ATO is going to expect you to have a personal percentage and a business percentage of your phone. So whatever the business percentage is, that's what you can claim off of your phone expenses.
Yeah, fantastic. Thank you for expanding on that. Awesome. Now, the next conversation I want to move on to is superannuation, because when you're an employee, your employer will set aside a certain percentage for super. But what about when you're a business owner? Who takes care of that?
Just like all the other things in business, that's another hat that you get to wear. So you decide when you want to pay yourself super, and there is no legal requirement for you to pay yourself super as a sole trader, okay? If you are a company structure and you are on wages through your company, then you have to pay yourself the super guarantee to all wages your company pays you. But for sole traders, there is no rule. So what I would suggest is, if one of your goals is to contribute to I'm always a fan of contributing to your future self. Paying your future self is what superannuation is putting aside money into a savings account, maybe once a month or once a quarter. And then at the end of the tax year in June, before June 30th though, give the money to your super fund, and then you'll be eligible to claim it as a tax deduction. So every year there's a different limit. Currently, it's around $30,000 a year you can contribute into your super fund and claim as a tax deduction. But you just have to be careful, because if you have employment income as well, then the super guarantee payments from your employer count towards that $30,000. So yeah, definitely best to check in with your accountant, but that's how it works for a sole trader.
Yeah. Okay. Thank you for explaining that. I love where this conversation is going, because we're getting very specific into all the details now. And I suppose for someone who is going, I just don't know what I'm doing, and we are having this conversation right now at the start of June, so it is nearing the end of financial year for Australians. So if someone's scrambling at the moment going, oh my gosh, I started my business earlier this year, I don't know what I'm doing, what advice do you have for them to help them get organized?
I would say have a look at your bookkeeping software, because this time of year, a lot of people who started businesses leave their bank reconciliations until the last moment. So they log into their Xero file and they'll see hundreds, if not thousands, of transactions. And that can be really overwhelming, right? So what I would recommend is you set aside a block in your time diary just to say, okay, I'm going to have a Finance Friday or a Money Monday or a Wealthy Wednesday, and make a booking in your diary that says, okay, this is when I'm going to look at my business numbers every single week or every single month, whatever works for you. So what you want to do is get all of your income and all your expenses reconciled in your bookkeeping software. If you don't have bookkeeping software, then it's going to be a little bit more tedious for you, because you'll have to go into your bank account and export all those transactions. And who remembers what they spent money on 6 months ago, let alone last week? So this is where it's going to be a bit harder for you. And so statistically, business owners who have accounting software in place get more tax deductions. And it's because none of them get lost. So you get all of your sales and all of your expenses together for the year, and that will help you work out what your net profit is. And that's what you're going to be paying tax on. Yep, that's what I recommend.
So it sounds like having an accounting software is so key. Is there any specific ones that you recommend? You talked about Xero earlier.
For sole traders, Rounded is fabulous. So is Xero. There's also MYOB and QuickBooks. But what I've found, just feedback from my clients, is that they find Xero and Rounded the most user-friendly. If you are intending to grow and scale your business beyond just being a sole trader, then I would recommend getting set up on Xero from the start, because Rounded is a wonderful accounting app, but it only tailors to sole traders. If you start off on Rounded, you might have to switch to Xero or another app when you become a company. But yeah, those are the apps that I would recommend. Xero also comes with a free receipt-keeping app called HubDoc that's included in every subscription. So it will store all of your business purchase tax invoices. So that way, if the ATO ever asks for any of your tax deductions, if you set it up and use it properly, then you'll just have it at your fingertips. What did I spend this $600 on? Oh, there's a copy of the receipt right there in my Xero file. So yeah, I would definitely recommend getting bookkeeping software.
Yeah, and that photo taking feature is so key because receipts fade. The ink on them will fade after years. So it's so important to keep a record of it. So what I used to do is whenever I buy something, I'll take a picture, upload it and label it, reconcile it, all of that. So that's all done properly. And I don't have to go remember 2 months later, oh, what did I spend that money on again? So HubDoc is the one you talked about.
Yeah, well, HubDoc used to be its own company, but Xero bought them about 5 years ago. So now HubDoc is free with every Xero subscription. A lot of people don't know it, but yeah
so useful.
It's included.
Wonderful. Now, Diana, we have some listeners who are from outside of Australia. So we're talking about America, UK. Is there any software that they can look into if you know any of them?
Oh, I'm trying to think of ones that I have heard people use. I know Harvest is one that I've heard of. I think that QuickBooks, the US version, must be a little bit more user-friendly than the Australian version, because I've seen business owners, I've heard them get really frustrated with Australian QuickBooks, but I feel like QuickBooks is really common in the US. So it must be a different version, but I haven't personally used it because I'm an Australian tax accountant. But yeah, there's also ones like Zoho. I've heard of people using Zoho Books as well. That's a US-based software. But yeah, those are the ones that just come to mind.
There's another one that I heard of called Honeybooks as well. And I think it integrates with some other platforms.
But anyhow, that one.
Yeah, they do similar things. It's just finding one that suits your needs, where you see your business, if you want to grow and expand bigger and get into a company structure. I personally use Xero. I have done that from very early on. And it's just, I find it really intuitive to use. So super easy to navigate.
Yeah, I think that one of the biggest things, other than saving money on tax, of having a bookkeeping software is how else can you know how much money the business is making? Because when you're looking at your numbers, you want to know, when did the money come in, how much came in, where did the money go, and what did we spend it on? And just knowing the answers to those simple questions is going to help you make better business decisions when it comes to growing and scaling your business. Because at the end of the day, the goal is to build a profitable business, one that pays you consistently, regularly, that you'll be able to scale, that will support you and your financial goals. And I think that sometimes we're so lost in the to-do list of the daily, doing all the things in our routines, that we forget, but wait a minute, let me take a step back and look at my business numbers. So that's where bookkeeping software will definitely make your life a little bit easier when it comes to a business owner.
100%. Yeah, and whilst you were talking about that, Diana, I thought about the word recurring revenue. That just came to my mind because obviously that's another way to be able to build an additional income stream so it can help you to grow and scale the business. Because a lot of what we do is one-off consult. You get paid $150 or $200 and then you don't know when they're coming back again. Fingers crossed they'll come back in 2 weeks like you told them to. So tell us a little bit about this recurring revenue model and what are some examples that you can think about.
So I would have to say that in my time as an accountant, the wealthiest businesses are the ones that have multiple income streams, okay? And you have to think about business is not linear. And so what I mean by that is in business, we have ups and downs. So we have seasons where we have higher sales and lower sales. We have months where we have lower sales and higher sales, and that's just natural, right? And what we want to do with our revenue is stack our income streams. And recurring revenue is a really smart way to introduce stacking revenue streams, because if you have consulting sessions, maybe a busy month or busy time for you is the summer, right? And so your sales from consulting sessions are really high in the summer, but in the winter, no one typically books. I don't know. And so then if you reduce a recurring revenue into your business, and you'll have monthly income that's coming in on direct debit. Now that's another thing. I find that the businesses that accept online payments and set up direct debits like through Stripe or through PayPal. There's lots of different apps out there, Thrivecart, Samcart, that can help you get recurring revenue and payments coming in. Those are the ones that collect a higher percentage of their revenue versus the ones that send a manual invoice with a bank account and say, pay me via bank transfer. Because how do you feel as a consumer when you get an invoice like that where there's no online payment option? So the businesses that accept online payments get paid faster. But the whole goal with stacking your revenue is you want to build a business that has consistent income months. And the more you can do that, the better. And it does take time, though. It's not something that you just wake up and start your business and you have consistent income. It's not realistic, but it's a goal that everyone should work towards. And it is possible after being in business for several years, for sure.
Yeah, for sure. And I think once you build your audience, that's something you want to be thinking about at the start. You just really want to get out there and start getting some experience and get things set up and build as you go. And for dietitians and nutritionists, I often think about ways that you can build an income stream without just trading your time for money. So recurring revenue through things like subscription services, monthly coaching services, or even online courses and programs, they are such a great way for you to be able to leverage your time better. So you're not just spending 1 hour with one person and you get capped on how much you can make. Yeah, like I was chatting to a client early this morning about starting a back-end retainer model. So once a client has finished their online program, they more than likely will need ongoing help. They need the accountability, they need the structure. So that's a great way to then build in that back-end recurring revenue as well.
Oh, yeah. I think the easiest customers are to sell to your existing customers, really. Like, you don't always have to go out and get brand new customers, because actually the cost to acquire new customers and onboard them is quite high versus selling to getting your existing customers and saying, hey, how else can I help you? It's so simple, but I think when we first start out, sometimes we overcomplicate growing a business in our head, and it's something that we miss. And this is where, honestly, having a coach can really help you fast track your sales, because the coach is going to direct you and say, hey, this is the fastest way to get your sales. And we'll tell you what has worked, what hasn't worked, what they've seen trending in the industry. And so 100%, other than accounting software, get a business coach.
Yeah, absolutely. Good. Not just because I'm a business coach, you and I have had business coaches ourselves. So we see the value in investing in the advice, the expertise to help us accelerate our growth. And I want to kind of tie into investing money to help us grow in businesses. So, at one point we go from just making money all the time to thinking about how can I get smarter about making money? So that's where you look at online courses, programs, investing, and business coaches. But a lot of us probably feel uncomfortable doing that because we're letting money go. And so what money mindset advice would you have for our audience who are at the stage of knowing they need help? They either need to hire someone to help them with the strategy side of things, or they need someone to help them do the thing. So it could be hiring virtual assistants. Any advice for them?
Money mindset when it comes to spending money is a big topic when it comes to business ownership, seriously. So what we want to do is practice mindful spending, okay? So when the money leaves the bank account, how is that being returned to the business in terms of sales, future customers? How long does it take to return into the business? Or when we spend money in our business, how does it buy back your time and energy as the business owner? Because as the business owner, you are the business's number one asset. Everything comes from you, especially in the beginning, until you get to the point that you are able to bring in a team member that can help you leverage your time and energy, or software to help you automate processes and make things faster. The name of the game is to make sure that your time and energy is protected in its best and highest use. And so by not investing in your business or in yourself, then it's actually stunting your business growth. And it's something that's a little bit of it feels unnatural to think, oh, I've got to spend money to grow. But what it is, if you really think about the intention behind where this money is going and how it's going to be returned to the business, it'll help you avoid shiny object syndrome of, oh, there's this trendy thing out there and I don't want to miss out, or this is the cool new AI, whatever, and I need to get in on that. But does your business actually need it? Is it actually going to help you? Are you going to use it? one place with money mindset that we often get stuck in is we'll sign up for subscriptions, right? So this is a little hack that I personally use is every now and then I will actually cancel my business card that all of my direct debits come out of for my business purchases. Now, why would I do that? It's because I want to have a pause where I will get the bounced payment notification, and then it'll give me a second to say, hey, do we really need to pay for this? How is the business using this? And it will also tell me where's the money going? And if it's worth it for me to spend my time and energy to put the new card details in, then I know that's something we want to use in the future. So that's a little hack that I personally use, but it is impossible to grow a business and to build profit without spending money, because that is the name of the game in business, is to bring in money and to spend less than what you earn. But in the startup stage of a business, you got to remember you're going to be spending more because you got to start building. You got to create that momentum. And once you get to that point, then when you're at the scale phase, you've got to switch your mindset of, okay, I'm not a startup anymore, so I'm not going to spend money like a startup. I need to start to try to build profit, pay myself consistently, get to that stage. So I think being mindful of what stage of business that you're in can be really helpful when it comes to money management and knowing where should I focus the money on.
Yeah, I love that term you've coined, mindful spending, and being aware of what you need at each stage. So I think at the beginning of your business, a lot of people have the luxury of time to do things, right? So you're getting your hands dirty, you're scheduling appointments and stuff. And I actually had this conversation in group coaching this morning because someone's going, I am really nervous about investing in this scheduling software. And it can be something as simple as that. In the beginning, you have time. Sure, you can go back and forth with someone, but it's also not so professional. So you got to think about how you want to present yourself, but you have the time in the beginning to do that. But once you start getting more consistent inquiries, you may have 10 people messaging you each week to try and schedule something. Your time is going to be worth more than the $49 or the $50 that we're paying for that subscription to have a scheduling software so clients can just easily click to book an appointment. They can go, if they need to reschedule, do that themselves. And it puts the responsibility on the client to be organized as well. So yeah, I love this conversation about just being mindful about where you're spending your money and being smart as well. Because I realized myself as I grew my business, I didn't have time anymore. So I need to think about how I can use AI, how I can have staff on board to help me with things. And it's learning to let go of that. I don't know, that mindset where you got to hold on to everything really tight and you have to let go in order to grow.
Yeah. And I think it's building this trust in your business that my business has got me. Also, if you have not done anything differently in business, then why would anything change in terms of your sales or in terms of how the business ran? So one big lesson for me was I started my business while I was working full time, and I did my business on nights and weekends. And then I got to the point where I didn't have time and energy to do both. So I quit my job and I went into my business full time. And I remember being so scared that I was going to run out of money because I had that safety net of my full-time job funding my business for the first couple of years. And I remember that day I woke up and it was my first day full-time in business. And I was like, you know what? I am actually not doing anything differently. I'm actually doing more. I have more time, more energy to put towards my business. So why wouldn't it grow? If it's already growing with what I've been doing, I'm just going to unlock the next level. And building the trust that your business has got you is something that we've got to all build as business owners.
Yeah, I love that. Self-trust is one of the biggest gifts that you can give yourself as a business owner. Yeah, because no one's going to come and tell you you've got it, you can do it, or looking over your shoulder saying, you got to do this, you got to do that. And it's believing in what you've got to offer to the world and then just being unapologetically confident about that you're going to make it work and you're here to help people. So why wouldn't it work?
Yes. And I also find that a lot of business owners, they give up too soon. So business ownership is long game. So if you think that you're going to start a business and in 3 months you're going to have replaced your full-time salary, that's probably, unless you bought an existing business that already has customers, that's probably not realistic for most people. Just keep in mind that it does take a bit of time and consistency to build that momentum. But if you just consistently show up every day or every week then the energy beyond that is going to build and multiply and snowball. Yeah. So I think sometimes people have these unrealistic expectations. I'm going to start a business and I'm going to be a millionaire in a year. Like, it's possible, but you got to think about what version of you is going to show up and be able to hold $1 million. Because if you don't trust yourself with $20,000, how are you going to hold $1 million in your bank account? You know?
And can you manage it if you have $1 million business and your systems might break and things like that? So it's being realistic, but also being very mindful of where you're at and what the next steps are and getting that guidance if you don't know how to get there as well. And Diana, I have a final question for you, which I think ties in everything we talked about so beautifully. And that is, I often have conversations with our clients where sometimes they feel like their moods or motivations go up and down depending on how much money their business is making. So I know this is more of a money mindset conversation again, but I'd love to hear your take on this. How can business owners ride out the full ups and downs in business and not tie their self-worth to how much money their business is making?
I think this is where you really have to understand why you're doing your business. What is your motivation for it? And you want to, yes, we need money and the business needs to make money, but you almost want to detach yourself from, oh, if I show up to business today, then I'm going to make $100. Or it's just, I would say you just want to show up consistently and believe that if you do the right things and you are strategic about how you spend your time, how you spend your startup money, trying to get customers. Number one, you got to prioritize getting customers and start to focus on the right things in growing your business. Then you're going to see the proof that you can do this. And it's going to give you confidence to not be like, oh, you know what? If I saw that my sales were dropped 1 month, then I would sit and ask myself, why did that happen? And maybe on reflection, I would see, actually, I didn't work as many hours. So I had this situation going on where I was distracted with life. And so it's, wait a minute, okay, if I don't want that to happen again, then I need to show up differently with different energy in my business. And this is where it can really help take you further if your purpose of doing your business is outside of just simply making money. Making money is necessary in business, but it's not the end all be all. And I think that those are the businesses that often last, are the ones that you really understand why you started and what change and impact you want to make in your customers' lives and worlds.
Very well said, Diana. Thank you so much. That is gold. And I so appreciate your honesty and just sharing everything in such simple terms so we can all understand. Now, Diana, if someone is looking for an accountant or they just want to get started, get their toes wet into like how to get things set up, where can they find you and ask questions?
My accounting firm is called Balance Tax Accountants. We're on all the socials at Balance Tax. And I'm also on socials at It's Diana Todd. And our website is balancetax.com.au. And so we're 100% online. You can book in 24/7. Don't have to come and see us because we do everything online and all the bookings are done via our website. And we're really flexible to meet clients with their schedules. And so that's where you find us.
Yeah. And you're based in Western Australia, but you have clients from all around Australia.
Yeah, actually, the majority of the Balance Tax clients are not in WA.
How funny. So we need to build up more businesses in WA then.
I've got a lot of clients in WA, but no, by far, most of them are over east because we specialize in online business. So a lot of accountants out there just don't believe that you can make money online. Like they just don't see how it can happen because they're quite old school. So yeah.
Yeah, I'm glad you're open about it. Yeah, that's awesome. And there's lots of online business owners for you to serve. Yeah, so thank you so much, Diana, for your time and your wisdom. I so appreciate you and for being so generous with all the tips and things like that. It's such a valuable insight for our listeners. So thank you once again for your time. If you guys have any questions, feel free to reach out to Diana. I'll link her channels below as well, so you can reach out to her. Thank you once again for tuning in, and I'll see you guys back here next week. Bye.